All right, moving on. Consumer discretionary is outperforming today following the latest CPI numbers. Small caps are rallying as well, with the Russell 2000 index climbing over 4% in today's trade, the most in a year. For more on what's causing this surge, we're going to now turn to Eric Green, Penn Capital Management CIO. So Eric, first of all, let me just get your take on this rally. Obviously, investors are cheering this. The stocks are ripping. What do you think, Eric? Is it time now to really sound the all clear? We can wave the victory flag here on inflation?
Well, the numbers were very encouraging this morning. So I do believe that this is the start of the fourth quarter rally for small cap stocks. It's been long overdue. Large cap stocks have massively outperformed for a long period of time, and valuations have just gotten very compressed relative to large cap companies. Fundamentals are not that bad, and the data, the economic data that's come in, the employment report as well as the CPI show that inflation is coming down, and that's one of the ingredients that we need for small cap stocks to work here.
What are some of the other ingredients, Eric? Why right now, besides sort of seasonality, which tends to benefit small caps into year end, why do you think they're poised to continue this rally?
Well, given the valuations discrepancy between large and small, even private markets versus public markets, we think the M&A market is going to pick up. And once the Fed is out of the way, it will give companies more confidence to do deals. And when you have this huge multiple discrepancy, deals from larger companies, even private companies, can be very accretive to buying these small cap companies that are growing faster. And there's a lot of areas in small cap that are completely dislocated from where valuations have been historically. Consumer discretionary being one of those areas.
And what about, Eric, the economy? A lot of people we have on the show, they're expecting a soft landing, but we talk to smart folks who think a recession could be coming too. Or if that's how it plays out in 2024, are small caps priced for that?
Yeah, small caps are actually priced about the average for the amount down from their peak before a recession. So small caps, if anything, are fully priced for a recession, whether it happens or not, where large caps have not priced that in whatsoever. So our economic view is more of a soft landing. However, we're already priced for something that's worse, and valuations reflect a scenario that's much worse than we expect.
What about, Eric, a large cap tech, though? I mean, I look at that, listen, rates move lower, large cap tech moves higher. Why not just stick with that trade?
Because the valuations have gotten way out of hand here on a relative basis. I do think that the S&P 500 will be okay. It's not going to have as good a returns from the top 7 stocks as it has had over the last year or two, just because other stocks are going to catch up. The market is going to broaden out at some point. And lower rates are helpful to small cap companies, just like they're helpful to large cap companies, particularly ones that need to borrow money. Having these lower rates, if they have floating rate debt, that's very positive for these companies.
Eric, one of the other areas that you sent us some commentary on that I'm intrigued about are the stocks that have gotten whacked about how these obesity drugs are going to take over everything, and nobody's going to eat junk food anymore. Nobody's going to go out to eat. And so some of these stocks have gotten smacked by that. Are you buying some of these restaurant food names, for example?
Yes, we are. And we own some of them already, and we've been buying more of them. It doesn't make any sense. There's some healthcare equipment, medical device companies that have gotten hit really hard on the fear that if people lose weight, they will never have to get knee surgery, back surgery, things like that. This second derivative negative movement in these stocks based on some guess of what's going to happen in the future because of these drugs makes no sense today. When you look at what some of the projections are out there, it's not going to be 50% of the country on these drugs. Not everybody's going to lose a ton of weight, and not everybody's going to stay on it for the rest of their lives. And if they go off of those drugs and they go back to eating the way they were, they're going to gain the weight again. So it sounds great, and I really hope for humanity that these drugs cause people to lose weight permanently and they teach people how to eat correctly. But the reality is it's not going to change the way people do things, at least for the foreseeable investment future.
And Eric, I want to get you out on this one. Traditional energy stocks, you're also a fan. How come?
Sure. I think we're still near the beginning of a multi-year cycle where we have not spent money on producing oil and gas for many reasons, ESG being some of them, other reasons just that companies in the past have spent all of their cash flow on drilling more. And now the exploration and production industry, based on a lot of negative comments from Wall Street, has decided that they're going to take some of their free cash flow and give it back to shareholders in the form of dividends and shareholder share repurchases. And they're not going to go out and overspend. Also, we're about a little bit more than 20% less on spending than we were almost 10 years ago. So we're not spending enough to get oil and gas out of the ground. We expect supply to be an issue for some time because of the lack of spending. There are very few new drilling projects, big offshore projects that were announced over the last 5 to 10 years. They should be coming online right now to make up for some of the other projects that are in decline. They're just starting to happen again. So companies that provide services to onshore, offshore drilling, those are the companies we think will really benefit, along with, we think the commodity price is going to remain in this $80 to $100 range for the next few years.
All right, Eric Green, thanks. A lot of actionable ideas for folks today. Appreciate it.
Yeah, thank you very much.